People will like to believe that what works today will keep working tomorrow. It's comforting. It's safe. It's human nature. We all build routines, systems, and beliefs around the world as we see it now. We invest in what's rising. We trust what feels stable. We convince ourselves that the patterns of the past will stretch endlessly into the future. But that's the illusion of permanence. Because the truth is, nothing stays the same forever. Not markets, not economies, not people. Everything moves in cycles: creation and destruction, expansion and contraction, optimism and fear. Yet most investors live as if the world moves in straight lines. They forget that every rise plants the seed of a fall, and every fall creates the foundation for a rise. They become comfortable, and comfort is the beginning of decline. When markets are strong, people stop questioning why they're strong. They stop asking the hard questions. What's driving this? What's changing beneath the surface? Instead, they start to assume that the current trend is reality itself. They confuse momentum with truth, but reality doesn't care about your comfort. It keeps moving quietly without warning, and when the cycle turns, as it always does, those who were asleep in their comfort are caught off guard. They call it a crash, a crisis, a surprise. But it's not. It's the natural rhythm of the world correcting itself. The illusion of permanence is powerful because it's emotional. It's emotional. It feels good to believe that the good times will last. It gives us certainty, identity, direction. But more attached we become to that illusion, the more fragile we become when it breaks. Most investors don't fail because they lack intelligence. They fail because they lack adaptability. They cling to what was instead of adjusting to what is. That they tell themselves stories about why this time is different until it isn't. The wise understand that permanence is an illusion. They know that the market doesn't move to reward comfort. It moves to balance excess. It punishes complacency and rewards awareness. They see the turning points before others even recognize the shift, not because they predict them, but because they stay awake to the possibility of change. That's the difference. Awareness. It's not about timing. It's about perspective. When you expect change, you don't fear it. When you accept impermanence, you stop resisting reality. You begin to move with it instead of against it. Think about it. The biggest opportunities always appear right when others are convinced the world is ending. The best decisions are made when others are blinded by denial or panic. That's because change doesn't destroy opportunity. It creates it, but only for those who are prepared to see it that way. The illusion of permanence blinds people to preparation. It makes them believe that tomorrow will look like today, and so when tomorrow doesn't, they freeze. They panic, they blame. But if you step back, if you learn to see the market not as chaos, but as a living rhythm of balance and correction, you stop being surprised. You start understanding that every shift, every drop, every rise is part of a larger story, a story that repeats itself through time. To see that truth is to free yourself from illusion. Because permanence was never real. Only the pattern is. And once you see that, once you accept that change is the only constant, you stop clinging to comfort. You start seeking clarity. You stop being controlled by cycles. You start understanding them, and that's where real mastery begins. When markets begin to shift, most people don't think, they feel. And in that instant, their emotions become louder than their logic. It's easy to be rational when things are calm, when prices move upward, when confidence fills the air. Everyone seems intelligent in a rising market. Every decision feels right. Every purchase feels like foresight. But when the ground starts shaking, when fear enters the room, intelligence gives way to instinct. And instinct, when driven by emotion, becomes the silent destroyer of discipline. Fear makes people sell what they should hold. Greed makes them hold what they should sell. Hope makes them ignore reality, and panic blinds them to opportunity. This is why most investors fail when markets change, because they haven't trained their minds to separate truth from emotion. They think they're responding to the market, but they're only reacting to their feelings about it. In those moments, it becomes the illusion of truth. It feels real. It feels urgent, but it isn't wisdom. The market, at its core, is a mirror of human nature. It reflects everything: our fear, our excitement, our impatience, our pride. When people chase prices higher, it's because they fear missing out. When they rush to sell, it's because they fear losing everything. Both are fear, just in different disguises. And so the cycle repeats over and over again. The calm are few, but they are the ones who win, because they know that emotion is noise and principle is signal. The difference between reacting and responding is everything. Reaction is immediate. It's driven by the body, by the ancient instinct to survive. Response is deliberate. It's driven by the mind, by awareness, reflection, and principle. When you respond, you pause. You breathe. You ask, what's actually happening here? That pause, that stillness, separates the wise from the reckless, because in every emotional storm, there's a moment of choice. You can act on the fear or act on the principle. Emotion says, do something now. Principle says, do the right thing, even if it's uncomfortable. And that difference defines outcomes. Think about it. Every great investor or every great decision maker doesn't eliminate emotion. They learn to see through it. They know fear is natural, but they don't let it dictate their path. They know excitement is fleeting, so they don't build their confidence on it. They operate by principles, timeless truths that don't change when markets do, because principles are anchors. When the waves rise, when uncertainty grows, they keep you from being tossed around by every emotional gust of wind. Without principles, you drift, you chase trends, you become reactive, part of the crowd. And the crowd never wins for long. The market punishes emotion. Not because it's cruel, but because emotion blinds you to reality. It makes you focus on short-term pain instead of long-term balance. It convinces you that temporary loss is permanent. It turns opportunity into fear and learning into regret. But once you recognize that emotion is part of the game, once you learn to observe it instead of obey it, everything changes. You begin to see clearly, you begin to realize that fear and greed are signals, not commands. They're indicators of where the crowd is and where you shouldn't be. The greatest power any investor can develop isn't prediction, it's control. Control over one's own emotions, control over reaction, control over perception. Because the truth is, markets don't destroy wealth, emotions do. Markets reveal it, they show who's guided by principle and who's guided by panic. And in that revelation, the difference between failure and mastery becomes painfully clear. Most people don't understand how the system truly works. They trade, they invest, they follow the news, but they never stop to ask why things move the way they do. They see the surfacey, but not the machine beneath it. The economy isn't chaos. It's a living machine, a system built on patterns, causes, and effects. Every decision creates a consequence. Every move sets off another. It's all connected. Interest rates, inflation, debt, productivity, human behavior like gears in motion, each turning the other. But most investors don't see that connection. They're too focused on headlines, too distracted by price charts, too impatient to study the rhythm that drives it all. They chase moments, not mechanisms. And when the gears shift, as they always do, they're surprised. They call it a crash, a correction, a crisis. But the truth is, the machine is just rebalancing itself. The system isn't emotional. It doesn't care about fear or greed. It runs on cause and effect, simple, logical, mechanical. And yet, the people within it act as if emotion can bend the rules of reality. When interest rates rise, debt becomes more expensive. When debt grows faster than income, collapse is inevitable. When confidence turns to fear, liquidity dries up. It's all part of the same design. The tragedy is most investors never take the time to understand it. They treat the market like a casino, not a system. They react to outcomes instead of studying the process. They want profit without understanding the mechanics of how profit is created or destroyed. But the truth is, if you don't understand the machine will use you. The wise don't guess what the market will do next. They understand why it moves. They study its structure, its rhythm, its balance. They step back far enough to see the cause behind the movement. Because when you understand cause as an effect, you stop being surprised. Most people fail not because the system is unfair, but because they never took the time to learn its rules. They believe luck or timing determines success. But success in reality comes from understanding how the machine operates and aligning yourself with it. The economy rewards awareness. It punishes ignorance. It doesn't care how you feel, only how you act within its laws. So when markets change, those who understand the machine remain calm. They've seen it before. They know how one gear moves the other. They don't call it chaos, they call it a cycle. And that's the difference between the crowd and the few. The crowd sees mystery. The few see structure. The crowd sees luck. The few see design. The crowd reacts emotionally. The few respond mechanically with discipline, principle, and perspective. Everything that looks unpredictable on the surface becomes predictable when you understand how the parts connect. Every shock becomes a lesson. Every cycle becomes a rhythm. Every setback becomes just another rotation in the gears of the machine. The problem isn't the market. The problem is perception. Most people don't fail because the system is broken. They fail because they're blind to how it actually works. And once you open your eyes to it, once you start to see that everything is linked, debt to growth, productivity to inflation, emotion to movement, you stop seeing confusion. You start seeing clarity. You stop fighting the system. You start flowing with it. And in that awareness, calm replaces fear, because you no longer depend on prediction. You depend on understanding, and that changes everything. Most people don't fail because they make the wrong move. They fail because they make no move at all. They wait, they hope, they hesitate, they wait for certainty in a world that has never offered it. They want the fog to clear before they act, not realizing that clarity only comes after you move through the fog. The truth is, successful investors don't predict the future. They prepare for it. They don't wait to see what happens. They build the strength to endure whatever happens. Preparation isn't about knowing exactly what's coming next. It's about being ready for anything that comes next. It's about understanding that the market, like life, moves in cycles, ups and downs, euphoria and despair, growth and correction. But most people, when the cycle turns, find themselves exposed. They built everything, their strategy, their confidence, their expectations, for only one side of the cycle. They prepared for comfort, not for challenge. And when the tide shifts, it's too late to swim. Preparation is what separates emotion from endurance. It's what turns fear into awareness and uncertainty into opportunity. Because the truth is, opportunity always exists. It just changes form. Those who prepare see it. Those who don't only see loss. People of the feeling of control. But true control doesn't come from prediction. It comes from preparation. You can't control the storm, but you can control how strong your ship is. You can't control the wind, but you can adjust your sails. And that's what preparation really is. Building strength before the test arrives. Most investors act like the next change will be the first one in history. They panic as if cycles haven't existed for centuries. They forget that every period of excess ends with correction, and every correction plants the seeds of recovery. Preparation is about balance, not blind optimism, not fear. It's about building a structure that can handle both sunshine and rain, diversification, discipline, patience, reflection. These are not just financial tools, they are principles of survival. You don't need to know what will happen next week or next month. You only need to know that something will happen, and you need to be ready. Most people wait for the crash to start learning. They wait for pain before they seek principles. But by then, the lesson is expensive. Preparation is humility in action. It's the recognition that you don't know everything, but you can still be ready for anything. It's the quiet understanding that fortune favors the ones who anticipate, not the ones who react. Think about it. Every moment of chaos in history rewarded the prepared. Those who studied patterns, those who built reserves, those who accepted change before it arrived. Preparation isn't glamorous. It's not exciting. It's patient, repetitive, the disciplined. And that's why so few do it. People would rather chase returns than build resilience. They want fast success, not lasting stability. But when the market shifts, when confidence collapses, when emotion takes over, the prepared don't panic. They don't rush. They don't guess. They act. Not from fear, but from principle, because they've already done the hard work. They've already accepted uncertainty. They've already built the foundation that can withstand it. The difference between panic and peace isn't knowledge. It's preparation. The ones who lose are often just as intelligent as the ones who win, but intelligence without preparation is like a map without movement. It looks good, but it gets you nowhere. Preparation is what turns knowledge into strength. It's what turns uncertainty into opportunity. It's what keeps you calm when everyone else loses control. And when the next change comes, as it always does, the prepared will not be surprised, because they never needed to predict the storm. They just learned how to stand through it. When markets shift, most people move too fast. They react, they panic, they rush to do something, anything, just to feel in control again. But a reaction isn't control. It's a sign that control is already gone. The truth is, a survival in changing markets isn't about speed. It's about balance. It's about staying centered when everyone else is tilting to extremes. When fear rises, people sell everything. When greed takes over, they buy everything. Both are reactions. Both are emotional, and both lead to the same place, regret. Balance is the quiet power that separates the few from the crowd. It's not about avoiding emotion. It's about not letting emotion own you. It's the stillness in the storm, the clarity in the noise. You see, balance doesn't shout. It doesn't chase headlines. It doesn't seek validation. It just observes. It listens. It thinks, and then it acts slowly, deliberately, with purpose. Most investors don't fail because they lack opportunity. They fail because they lose balance. Let fear convince them that everything is falling apart. They let greed convince them that the good times will never end. They swing from one extreme to another, always chasing comfort, never finding peace. Real balance isn't comfort. It's discipline. It's awareness. It's the ability to stand still while others are running in circles. Markets are mirrors. They reflect human nature, and human nature craves certainty, validation, and emotional safety. That's why balance feels unnatural, because it asks you to hold two truths at once. That things can go wrong and still be okay. That losses can happen and still lead to growth. That chaos can exist and yet opportunity lives within it. It takes emotional strength to hold that space. To say, I don't need to react. To say, I don't need to know everything. I just need to stay balanced. Balance is built in quiet moments, when no one is watching, when no one is cheering you on. It's built in how you think, how you breathe, how you choose not to panic. It's built in reflection, in your ability to step back and see the bigger picture. The crowd always moves first. The wise move last, not because they're slow, but because they're stable. They wait until the fog clears, until the noise fades, until their principles align with their actions. And when they finally move, they move with conviction. Balance gives you time. It gives you clarity. It gives you strength in uncertainty. You can't control the storm, but you can control your center. And that's what balance really is, the center. It's where wisdom lives. It's where power lives. Without balance, emotion becomes your master. You jump from one impulse to another, confusing movement with progress. You tell yourself you're doing something, but all you're doing is reacting to fear or excitement. Reaction is noise. Balance is signal. It's the reason the greatest investors speak softly, act slowly, and think deeply. Don't confuse urgency with importance. They don't let headlines define their reality. They understand that markets don't destroy balance. Imbalance does. When you're balanced, every rise and fall becomes information, not intimidation. You begin to see things differently. A drop in price is no longer a threat. It's an opportunity to test your discipline. A rise in price isn't celebration. It's a reminder to stay humble. Balance is freedom. It frees you from the highs and lows of emotion. It allows you to act with principle instead of panic. It gives you peace in places where others feel pressure. And in the end, that's what separates the few who endure from the many who fall. Not intelligence, not prediction, not luck, but balance. Because when everything around you is shaking, when fear is loud and greed is louder, balance is the only voice that still whispers the truth. Stay steady, stay aware, stay balanced.